Yo, good morning, traders. Welcome back to another episode of Market in the Morning. Sadiq, Yusuf, good morning, everybody. LG, what's going on? Tazzy, welcome. Andrea, Silver, George, what's going on? Matt, hello. Famous, what's going on? Guys, good morning. Drop a good morning. Drop some W's. What's going on? Good morning, everybody. Welcome to Market in the Morning. Welcome to the Market AI community. Guys, I hope you're ready to make some money. It is Tuesday. It is June 23rd. I almost said January 23rd. It is June 23rd. Who's ready to make some money, guys? Let's get Market in the Morning started. Let's find some levels and see what's going on. I don't know about you guys, but I woke up with a ton of tweet updates and market updates from new headlines about some progress or degress going on in the war. So we're going to cover those headlines right now. Drop a good morning. Let me know what you're trading. Market in the Morning starts right now. Yeah, all right, guys. All right. So first thing we always want to do whenever we get started, right? Part of our morning routine. Guys, good morning. Hope you're all doing well. S&P 500, we want to look at what's moving on market and what's going on in our headlines. So S&P futures sag as AOSPI crash and hawkish Fed bets bite. So we know hawkish Fed is now into the market, right? That hawkish stance. We know half of the Fed was looking for a rate hike sometime this year. There was even a headline yesterday from Bank of America saying that, listen, there's a chance that we get up to 3 rate hikes this year. So we're going to have to see. Yeah, guys, the lab is going to be joining us in about, I would say, 30 minutes. The lab's going to join us very soon. So we're going to break down some levels. We'll cover some S&P and NASDAQ. And then when the lab joins, we'll cover some gold as well. So S&P 500 we see is a more slightly bullish bias, even though things have been a bit more to the downside lately. You can see what's supporting that bias. What's going on, Sans? Good morning. But the first thing I want to note and look at today is the news feed. I want to know what was going on this morning that I was getting. Again, I don't know about you guys, but notification after notification. Will U.S. international sanctions on Iran be lifted? Only Iran will control its unfrozen assets, Iranian envoy says. Iran military sources say Strait of Hormuz vessels traffic to vary daily based on conditions. News agency citing military sources says only a certain number of vessels per day are allowed to pass through the strait. This amount varies according to conditions, like the other headline we saw. Trump says Iran agrees to nuclear inspections. So this was about an hour ago. So here we go, guys. Look at this. An hour ago, we got a whole bunch of Trump headlines. Trump says money released to go into U.S. Trump claims nuclear accord will ensure honesty. Right, we could expect honesty from either side. I'm sure you guys already know that. Trump says Iran agrees to high-level nuclear inspection. We will keep all ships in place to reinstitute, the blockade if necessary. And Trump says, I have agreed to allow Strait of Hormuz to remain reopened with no future naval blockage. I mean, is it really up to the U.S. to say if the strait remains open? Really? Not really. The U.S. had their blockade in there. They said they're lifting it. They're pulling it. It's staying there. It's Iran's strait. It's the Strait of Hormuz. It's in Iran. U.S. doesn't really have that call. This will ensure nuclear honesty. If they don't agree to this, there will be no further negotiations. So Trump's sort of putting his foot down when it comes to the nuclear aspect of the situation. Trump says Iran has fully and completely agreed to terms amid fake news criticism. Just a whole lot of Trump stuff. Iran agrees to form panel. BB is not stepping back. Oh, what are we getting? Yo, morning, Ozzy. LG, what's going on? You're saying some Israel news, so let's check that out. Let's hit our search icon up here, high impact. Let's see what have they been doing. Lebanon's Hezbollah says Iran fired at group of civilians in the southern Lebanon. Yeah, you're spot on with that, right? Israel not really agreeing. Now, they said they agreed to the ceasefire, but the question of if they're following through with it, well, the answer to that is pretty obvious. The answer is no, they are not following through on the ceasefire on their part. Now sort of becomes the question of, does Iran see this and acknowledge it as, okay, well, the US isn't playing nice either? Or do they see it as this is just the way Israel is? They're going to keep attacking. We have to see how things play out, and we have to see how the headlines respond to these. These were just an hour ago. Death toll from Israeli gunfire on southern Lebanon rises to 2. Lebanese civil defense and state media says. So it's still escalated war-wise over there, but the question and the whole relief that the U.S. is seeing is starting to really see some follow-through. So let's hit the charts for a moment. Take a look at S&P 500. Let me just get the settings over here, apply to all. That way this other one is also the darker color as well. And let's put ES in this chart. And we're going to take a look at the S&P 500 first. Now, yesterday, guys, clean S&P 500 call out. That was so clean. We were looking for a sweep of those highs and then a reversal back lower. It gave us that. If you guys were here yesterday, I did not find an entry up here. It was very choppy price action for the time being on the 5-minute. It was very consolidated. We had the breakdown. Didn't really have a retest of this area. We just consolidated and then broke down, and then we chopped for the rest of the day. See how we chopped up here? We had one leg down right over here, and then we just chopped for the rest of the day. So there was really only one move for the New York session yesterday on the ES and NQ. And then look at the after hours. Look at the overnight session right here. This is, again, a more bearish move that's catching a lot of people off sides. Now, the main reason I say this is catching people off sides is because a lot of people are looking at just the headlines that, oh, the US and Iran, the war's being negotiated, things are easing, things are going to be better. Shouldn't the market be bullish? But what they're forgetting is the Fed is still hawkish. The Fed is now not still hawkish, but much more hawkish. The Fed is leaning towards a rate cut versus leaning towards just higher for longer rates. So when we see that shift in the Fed, that's when we know there's going to be a shift in the markets as well. And the first sign of that was the non-farm payroll, this massive red day we had right here. This was Friday, June 5th. Today is June 23rd, Tuesday. And look at the daily candle here on the S&P already. Already a major move to the downside. Something I'd be interested in going into today would be to see if we can have a pullback towards the open price and then reject it back lower again. So I'm going to be looking a bit more bearish. I know the fundamentals are still leaning bullish. We see that on our market terminal. But I'd much rather off the Fed be looking on the shorts. So we'll keep an eye on that. We'll be patient. We'll mark out some key levels. We have our open price marked out, our previous day low marked out. We're already below both of these things. This zone right here, it's a 30-minute demand. So we see that this was support. We failed it. Now I would want to see resistance in this area. So short position wise, I'm looking for some shorts above 74.72 on the S&P 500. I really don't want to see us above 74.95. So that would be my line in the sand, about 7,500. If we get back above that price level, then I would actually expect price to be able to trade right back towards the 75.80s. So right there, guys, we have two trade setups we could be looking for on the S&P 500. First trade setup is going to be shorts off of a rejection of this recent support, becomes resistance, along with the Fed shift. And also, not only the Fed shift, but let me pull up our equities chart. I'm sure most of you know SpaceX has taken a huge drop, right? It was all the way at 225 at some point. Now it's all the way back down to 152. That's where it released. Its initial IPO was 135, came out tradable at 150. Now hit peaks around 225. Now it's at 152 again. I'd love to see SpaceX drop below 150. Would love to see the rest of these equities gain some weakness too. We see Nvidia right here is gapping down today. So if we get that move, then great. We look for that follow through. What about ADP? Good call. Let's check out ADP and see what's going on there. And again, this is trade setup 1. Trade setup 2. We're able to do our market analysis. Think of it like we're doing our prep every single day. It's what you guys should be doing too. When you're joining these streams, watching these episodes, you should also be doing your own charting and seeing where your levels line up. Do they coincide with my levels or in labs levels? Are they giving you more confidence off of what we're talking about? Or maybe you see a price level that I missed. Well, guess what? I want you guys to send that over and send that into our Discord, guys. I'm going to pop that up right now. I'm going to send you guys the invite to that too. Definitely want you guys to join our Discord community and drop some comments, drop some screenshots. Yeah, need SpaceX at $90. I'm with you on that, bro. SpaceX $90, that's a buy level right there. Join our Discord. We're going to try to go live on our Discord channel as well as our Market AI channel here. That way we could build more of a stronger audience with you guys, and you guys are also able to communicate a bit better with us with screenshots and everything that you see on your chart. So looking forward to that. So let's see. We were looking at ES. We saw, what do we want to see? ADP. Let's check it out. Economic calendar. ADP weekly, 30,700. Prior was 25,000. Little bit of an uptick on our ADP. Nothing major. High impact released off the moves currencies. Yeah, again, nothing major. This is the pulse. So a monthly measurement of percentage of working age population that is either employed or actively seeking employment. It reflects labor market health and economic participation trends. So again, ADP is not something that we're going to see a reaction like we get with non-farm payroll, unemployment, CPI, PPI, PCE, Michigan consumer sentiment. So nothing that we're going to be really taking with strength, right? It's a grain of salt type of market read right now. So we see markets are still moving lower. I'm definitely, like I said, curious on the shorts today, seeing the structure that we're trying to break and just the daily time frame. In my opinion, guys, once we had, and I told you guys about this yesterday, the catalysts in the market, we had a 5% pullback here. This is not a small pullback. This is not a 2% pullback, 3%. This is a full 5% pullback, and it was not just a pullback. This was a move that was brought to us from non-farm payroll. So when we have a catalyst like that that shifts the Fed, guess what? It's not just non-farm payroll that did this. It's the Fed's shift that did this. When that's the case, we really see a lot of follow through there. So I'd want to see, does this, look at this. First off, it took out this recent low right here. So that's already making a lower low. So we just made higher high, higher low, higher high. Then we came back and we made a lower high, a lower low. We pulled back up. We did not break this high, which means we created a lower high. Now our target would be this downside again. Again, I'm telling you guys here before it happens, we've been doing this for like a week now since the non-farm payroll and everything, really, I guess 2 weeks. I want to see markets shift back to the downside. I want to see us in more of a bear trend. I want to see us fall just straight down. Obviously, we're not going to get a straight down. We might, seeing the price action we got when we were moving straight up, especially because it's going to be catching a lot of traders off sides. So just something to note, something to keep an eye on in the S&P 500. If we do continue lower, so let's come up with a third plan for the S&P today. If we break below the 7,400 down here, the area I would look for a retest would be this zone right here. We're going to mark that out with our box. We're going to extend it to the right. So what I would be looking for is a break below and a retest. So break below this zone, the purple zone, break below the green zone, and then pull back, give me a retest. Guys, we're going to cover gold in just a moment. We got Nalab joining us very soon too. He'll cover some gold, set us up with some nice setups as well. But S&P 500 wise, 3 trade setups we'll be looking for, all off of predetermined levels. So it's not like markets are going to open and we're going to be jumping around. Markets are going to open and we already have the levels we're looking for. Now we can take a quick look at the NASDAQ as well. I do want to take a look at NQ on our market terminal. Now we see NASDAQ is a bit more slightly bearish. So we're starting to also see some divergence in the equities markets. South Korea equity crash, Stokes global risk off and de-risking. Stronger dollar on Fed hike bets tightens financial conditions. Fed higher for longer stance lifts discount rates for growth stocks. big tech slash share buybacks as AI capex absorbs cash flow. So that's talking about, when we talk about capex in these big tech companies, what it's referring to is it's referring to how much money those companies are spending on AI. And because AI has taken such a big leap this past year, capex on these companies has gone anywhere from 2 to 5x where it normally is. And because it's growing that fast, it's also going to continue to grow. Now, some companies, I believe it is Meta or Amazon, had an expected capex of $200 billion. It was Amazon. $200 billion. They originally looked for $150 billion. Then they increased it. They said, okay, actually, it's going to be $200 billion. That's another $50 billion they have to spend on capex. That's not just, oh, the company has to spend more money. It doesn't matter. The companies have tons of money. Yes, that's great. But what matters is from the investor standpoint. If the investors know that, okay, right now, AI gives me a 30% ROI, or it has this big of a spread right there, where this big of a margin where it costs them 5 cents on the dollar and they're making that full dollar in return. Okay, well, now it's costing them 20 cents, 30 cents, 40 cents. Their margins are getting smaller. Investors are getting uncertain. And here comes one of the 3 attributes that markets react to: uncertainty. That's what drives us lower, just like we saw last year with tariffs. So NASDAQ, really interested to see these areas that we're at right now, price react to. We have a little bit of an hourly demand here. We have right below us a 30-minute demand. So I'm seeing a lot of support. But if markets open, equities are dumping, I'm going to be looking for a stronger move to the downside to target 29,400 on the NASDAQ today, 29,400. And we could take a look at market and see, oh my goodness, guys, look at that. 29,400 is the target level on the market AI terminal. You guys just saw that here live. I did not look at that here first. I was looking at the analysis, doing my levels, and it lined up perfectly. Again, that's how you want to use market every morning, that you're doing your own analysis, but making sure the fundamentals in your market terminal is agreeing or possibly even giving you confluence on it. The South Korea stock market index crashed 10% today. Oh, wow. What is happening in South Korea? Good question. We could take a look, see if there's any headlines here. South Korea. We'll check high impact first. 10 hours, financial minister. That's North Korea versus South Korea, most dangerous. Nope. We could check all, see if anything's under all. Ukraine Ukraine ministers to discuss North Korea POWs this month. Okay. South Korea says ready to accept North Korea POWs from Ukraine if they seek refugee. Not really seeing anything that would justify a 10% crash in their markets right now. We'll see risk off for KRW and local risk assets, as the remark signals discomfort with a weak one and raises the odds of verbal or actual FX intervention. Okay, there you go. There it is. Current FX level. So intervention, right? We're seeing a lot of that. KOSPI. Okay, got you. CO stock market KOSPI ends down 9.99%, biggest daily fall since March 4th. Korea exchange triggers circuit breakers on KOSPI. Wow, that's crazy. Falls 8%, trading halted for 20 minutes. This is huge. Guys, we're bringing on the one and only Mr. Lab.
How's it going, Kevin, my friend? How are you?
Bro, it's doing good, man. How are you?
All good. Another day in paradise, you know? You know how it goes.
Sir.
Good summer day, good day in the markets. Fantastic start of the week, and great show yesterday, bro. You killed it. And yeah, man, I think we would jump straight into this, right?
Bro, hell yeah,
you've
man.
already kicked it off. I'm like 20 minutes late.
All good, bro. That's all good. You're a busy guy. Yeah, if you want to get your screen share going, I told everybody, we'll cover some S&P. We covered a little bit of NASDAQ, but let's save gold for the one and only.
Yeah, let's check it out.
Cool.
Let's go through it all. We have tons. Can you see my screen now?
Yes, sir.
Awesome. So we'll start off a bit with just what's been going on and how we've been taking advantage of it, as well as potential trade ideas for the coming session. So thank you everybody for joining us always. We're live from 8:20 to 10:30 a.m. every single day, calling out banger trades, giving you amazing educational insights and so much value that, frankly, 99.9% of the mentors cannot give you. And we don't even charge you for it. So all we do in return is build a platform that we love to work on. And that's the best fundamental analysis platform in the game. So when I'm looking at gold, I know that currently it's the geopolitical tensions, the escalation, and also the Fed higher inflation for longer path that we're currently on. Yes, we have some peace talks and the straight reopening, but on gold, that's not as holding as much weight as we previously see. A little more of these ceasefires hold, like even last week or the following previous week, end of week close, where you had Trump talking about the deal and then gold gapping up from the deal open. Once all of that settled in, we had the Fed narrative come back into play with the higher rates for longer, which, if you guys remember, we took advantage of those sells right overnight on Thursday. Plus, we also took the sells live on market. And I had some viewers telling me the shorts weren't going to play out. Shorts were not going to play out. And all I'm going to say is I treated myself to a nice dinner. And they played out. You know, what can I say? We just follow macro fundamentals. We follow the macro sentiment. And when you're following that, you can then position yourself and align yourself with the market. Just like how on Sunday, we had gold push up, and gold pushed up to a very key price area, which we previously also had mapped and marked up over here. I took shorts on the rejection of it. About 24 hours of holding that trade later, it finally played out to the point where I was taking profit near these lows over here. So now I know that I'm bearish on gold, and I can easily tell that by looking at market. I can then also turn on scenarios, and I understand that, okay, even if gold doesn't push down from here and we push a bit higher, or even back up to 42.05, it's still bearish, guys. And that's what's important. So right now, we are seeing gold respect this resistance that we formed during pre-New York hours. Now, I have my sell from up here Sunday. This is where I entered my sell. I went to sleep with profit, woke up right at break even, right at my entry. I let it play out because my stop loss is up here. My take profits are down here. I'm going to let it play out. I'm not going to touch it. There was times, yes, after 12, 13, 15 hours of being in the position, sometimes you get like, shit, man, I just want this to play out. It happens. But this is where I talked about is that I don't like intervening in my position. If I'm in the market, I'm in the market. I'm not going to be in the market and then out because I doubt that position now the next second that it doesn't move. And this is a test, right? It's a test of your conviction. It's a test of, do you really believe in this trade idea? And it worked out, but it took, you can see Sunday market close, market open, all the way till Tuesday, 1 a.m. Eastern. That's 36 hours of waiting for this trade to play out. And it played out right to my target. Now, when I woke up this morning, I had already taken profit, withdrew that money for the week, early start, early payday. And then I saw price over here. So I see price formulating resistance here. And then what I also see happening is that when we retested it again and we started creating a rejecting in, this is where I took shorts for this session. And this is what we have to keep in mind is that once we did this, we respected it. We came back here, created another lower high. Now, I want you to keep in mind that we could have had the other scenario play out where we pushed up a bit higher and then came back down, which also works out, right? You know that once you snap back below into here, you're going to get that selling take place, and then you'll see those outflows. Now, where can gold go here? Now, you have these price points down here. Remember these lows that we rode from this sell call that we had, the 3,000 point gold sell that we call. Now, gold can still push, yes, lower to this target down here, 40.25, but there are some price sensitivity points right before there if you're trading CFDs, that's 40.50s and 40.60s. Now, if I go to GC, now what does that look like? GC, that looks like it's about 40.70 as well, right? 40.75. But what the main thing to keep in mind, guys, is that we anticipated this sell-off back. That we were the ones telling you sells when price was up here. We were telling you Fed comes out hawkish, guess what's going to happen? That narrative's going to hold. And that's exactly what's happening right now. And you can see that all of these peace talks that are going on and the straight reopening, it's not holding much weight and emphasis on a market like gold right now, especially something that's so driven by macroeconomics and just overall institutional positioning. Within this case, it following the Fed's recent hawkish shift. Now we understand that, hey, if we remain bearish and we continue to play this sentiment, I can then sell any pullback. Now, let's map out a potential scenario. I'm not saying this will happen, but in case this happens, right? What I see on my 15-minute time frame is, okay, I'm just going to hide this for now. Okay, we've clearly respected this. We created the weekly high right here. And that was perfect because it was the high of the week. Since then, we have actively sold off here. We had sellers jump back in here after we broke below these lows, which is a very great trade because now you know the market is okay. We consolidated for basically a whole day. Now we push down, you know there's going to be selling pressure that's going to at least take you down to this area and then eventually down to TP2. So if I know that, I can then start to look for lower time frame sell confirmations once price is broken down below here. And that's where I mentioned, this isn't necessarily selling the most recent low because you have a much larger range towards the downside to fill. Now, if you start seeing, there you go, you start seeing price sensitivity here, seller jumping in. Now, this also, in turn, is another great area where buyers can drive price up to before you see sellers jump back in, and then that move gets faded on. All that ends up looking like is just a regular intraday retracement on our way merely back down to the lows over here. That's a scenario that could play out. Maybe it plays out, maybe it doesn't. Maybe price just goes from here, which in that case, if you're not already in from this highs over here, I wouldn't look to get in from down here, right? What instead you'd want to wait for is to see how we push back up, if we push back, and how we react to these highs. If we push back up and then we come back, snap back below, you can look for sells on the snapback and retest of this price area. Because what that just shows is, okay, we took out those sellers, we just tapped into a higher price point, we closed back below that high, and now we're continuing down. And that's going to give us confirmations to re-enter those sells if you guys are not in. As I mentioned, I'm in from this high up here at 28.29. So my stop loss is just a little bit above here in case we do end up with a scenario like this. Now, let's say that doesn't play out and I take a loss on this trade. Okay, let's say I take the loss. Where can price then go up to? I'm still bearish on gold right now. I'm still bearish on gold because I understand the fundamental factors that are aligning, plus overall technicals are playing out bearish since we had the FOMC rate decision. So when I click this icon, this candle over here, I can see the hawkish Fed dots, and basically the Fed telling us, hey guys, rates are going to stay higher for longer, that we have a higher dot plot for 2026, 2027. So the market started pricing that in. Now we are at lows, right? And I always mention too, the probability of gold continuing from here all the way to down here is much lower than if gold taps into here. Then you have a higher probability because this is a much better price point for sells, right, Kevin? Now, It's the same thing. If we were to push up into here, guess what? If we get proper confirmations for sells, that could be a good area for us to look for sells, okay? Again, that is just a retracement. And what that ends up looking like is just a pullback for further continuation down. And as long as you're aligned with the macro bias overall fundamentally in the day trading and swing trading, you're going to be good. Now that I have mapped out these two scenarios is that, okay, either in this session, we wait for some sort of push above these highs, take out those sellers, snap back below, continue down, boom, one trade idea right here. And then the other one is, okay, we pull up to a known area of supply that we previously tapped into, right? If we tap into there and we get a rejection, just like how we call out trades, we're going to take that trade as well, and we'll call it out. Until then, I wouldn't look to enter sells here because I'm already positioned from here. That gives me enough breathing room to know, okay, even if price comes back, worst case, I'll take a minor loss. Versus if I'm trying to sell here now, and you're really trying to look for a sell position here, then your stop loss is so much wider, with your take profit not being that big of a range, right? So you want to make sure that your position where your risk reward is on the higher end, as well as your probabilities of success for that trade are also on the higher end. Just like how I broke it down, guys. Like selling from here, yes, it may play out like right from this price, but it's less likely to play out than selling from up here, because this is a better price to sell. And that's what you need to, again, embody in the market. It's the probabilistic thinking that you have to make sure is at the forefront of your mind. Because if you're not thinking in terms of probabilities, absolutes don't play out in the markets. There's never an absolute in the market, right? So as exactly how I mapped it out here to you with my using my thinking and my knowledge, market does the same thing. Market does all the heavy lifting for you. So now that I'm on gold, doesn't matter if I'm on XEUSD or I'm on GC, I have the scenarios to map out, right? You can see even if we push up to here or we push up higher, we're still anticipating a move towards the downside at these lows. Yes, smash the like button, guys. So that was, again, our quick analysis on gold. And you can see it really is that simple, where I go to market, I check my day trading bias, I check whether I trade GC or whether I trade XEUSD, I check what my levels are. I click the scenarios button here, and this is projected price scenarios plus structural pullback zones, showing how the buys could play out. So I click this, I understand instantly, hey, even if we pull up a bit, I can still look for shorts, given the fact that we have something like this that ends up playing out, or a higher level, which market, again, has mapped out. So now I'm ready to attack gold. I then go to my economic calendar. Nothing on the docket important for today besides the main meat and potatoes for the week is the PCE data that we have on Thursday. So we'll see how that plays out. They're expecting another increase, right, for PCE price index over here that I have open up right down here. They're expecting another increase from 3.8 to 4.1. Again, the minimum maximum ranges are 3.9 and 4.3. So as long as we're within this range, given that PCE comes out at 4.1 or maybe higher, as long as it's within the range, the volatility is going to be more subdued, and we're just going to continue the same narrative, because higher inflation equals higher for longer rates, right? Fed, again, it again emphasizes this narrative. Higher for longer policy undercuts gold versus yield assets. Boom. Now you know that gold is bearish. Gold has been bearish since the start of the war, but this is just a continuation of it, given the fact that we have different factors playing into play now. At first, we had the escalations that took place basically the entirety of the last quarter, and now we also have the rate path and higher for longer narrative in play over here as well. So gold over here, I hope it just continues. That would be great for my profits, my take profit for these positions. Excuse me, guys. All this talking gets me exhausted. It's around 60s. It's around this price area over here. Once we break this, it's going to be pretty clean back to the lows. But that's a good take profit area. As we dig into the higher 60s, lower 60s, I will look to exit my positions from 28, 29, because that is a good 600-700 pips there, and I'm more than happy to take that, given the fact that I've already made my profit on this sell play that I mentioned to you guys to even look out. As I mentioned last week, I'm like, guys, market open, if we pull back, you want to look for sells, make sure you get it on the weekly high. And that's what we did, right? This was the high of the weekly candle. We positioned ourselves from a good price point, knowing that we had a full range to fill towards the downside, that this range was incomplete. Yes, we took advantage of this move last week, but market opportunities are endless. And you can see since just Thursday, you didn't even have to trade FOMC, right, Kevin? Like since Thursday, you had the move after FOMC that took place the session after. We had the entry we called out in New York session over here, which played out for another 1,500 points. Then you had the move from Sunday market open, which is still playing out right here and continuing to play out. And then you had the call out for gold all over here. Well, it happened before market in the morning, but again, it's the same principles. It's the exact same principles. The fact that if you follow market analysis and bias and the fundamental macro bias, and you position yourself on the pullbacks whenever price is aligning with it, that you're destined to succeed, or you really increase your probabilities of success. Now, if I'm in these shorts here, I don't give a shit if price pulls back, right? If it pulls back to my price point, or if it hits my stop loss. Let's say I get unlucky, it hits my stop loss and then does this. Guess what I'm gonna do? I'm gonna re-enter right here once I get that confirmed, because I have that conviction. I have that conviction in myself. I know my analysis. I'm aligned with the macro bias. So what I'm not going to do is feel FOMO, because look what we just went over. Within these opportunities, Thursday, Friday, Sunday to today, and this for me is a multi 5-figure trading profit in just four trades here. Now, this is just since Thursday, and I'm just intraday trading. I'm not here on the charts every hour watching the markets develop. I enter my trade and I left it, guys. Yes, I came back to it the next morning. I observed price action during that session. I was watching Kevin while I was doing my work in market in the morning. And even Kevin was saying, guys, it's going to be, we're going to set up going into the week. And that's exactly what happened. We had the move take place, but sometimes it takes longer than you anticipate. Just like how this pullback, I mentioned, hey guys, I took a loss trying to short here, but then we had the optimistic headline holding more weight, but I still took the short here and I profited, made back my loss plus thousands more. So now I can see that with conviction, with the right macro backing over here, understanding what's going on, understanding, hey, these are the breaking news headlines. Yes, they're coming out with more peace deals, ceasefire, but overall higher rates is holding the weight right now. And gold has a range to fill towards the downside. So what I'm going to do is I'm going to align myself for those sells. Now, again, look at this. I said, I don't care if gold continues from down here. I wouldn't personally sell down here, because to me, this would be like a C-level trade, because you're like now, if I'm mapping out my session trades, I have this one here that I'm looking out for. We have this one here. If we're looking at types of setup, this is like a B, A level, A minus level setup where it pulls back, snaps above, snaps back. We enter sells on the snapback below. That would be like your A minus setup. This would be like your A setup where you had a deeper pullback. So this would be like your B minus setup. And I don't want to take no B minus setups. I want the quality ones. So instead of looking for entries and getting FOMO, what I'm going to do instead is know that, hey, you know what? It's fine. If gold pushes from here and continues towards the downside, what I'll just do is I'll just wait for gold to create a new low. And I know then it'll just pull back intraday, because gold doesn't just break levels at once, and then you'll have another opportunity. And guess what? You're going to come back and be like, yeah, you know what? Nalab told me have an abundant mindset in the markets as well as life. And since I started doing that, I've just made more money and my life is just way better. Sun has been out longer. There's less rain in my city. Things are just going good. So it's that same abundant mindset that's going to cause you to not have FOMO. Because if you know the market just moves a shit ton every single week, how could you possibly have FOMO? Just 2 weeks ago, gold was at 4,500, and we were taking sells live here on the stream. We were taking the sells live here on the stream, calling out NFP live on the stream. And look at gold now. It's at 4,000. So opportunities are endless, guys. And it always is about making sure you're aligned with the macro narrative. Now, I'm in profit here. Now, what am I really looking to do here? I'm looking to see how we react around these lows. I have a level at 4,100. So if you're a scalper, you could look to take profit, and you're in from these highs, or you're in from the retest of 25 over here, 41.25 being a psychological level. Excuse me. If you're in from the retest of there, then you could look to take profit at these lows, because that is still solid 300-point movement towards the downside. Since I'm an intraday trader, excuse me, and I really like to milk the markets, my downside targets, and I've explained this on why these are my targets, are again down here. And if you go to market, they are aligned with market's downside target level as well. Market has it as 40.75. I have mine a bit into these wicks with higher 60s. But as we approach it, you'll see me saying, hey, I'm taking partials, because that's what it's about. It's about actually taking the money off the table and not only putting it in your trading account, but making sure it hits your bank account. Because just taking a screenshot of your trading profits and not hitting withdraw isn't going to pay the bills. What's going to pay the bills is you being patient, having an abundant mindset in the market, executing, having conviction in your analysis, putting your balls on the line, and evaluating how that trade played out. Whether it's a win, whether it's a loss, it's all a lesson. And the more lessons I learn, and the more information I soak in, the better I become as a person and as a trader. And that's what this is about. It's long-term success over short-term dopamine. So you can take your screenshots, but just know as soon as you take that screenshot, you better close that position too, brother, because you took that because you got the dopamine from the amount of money you were up. Now, if you don't secure that and the market goes against you, guess what? You're going to go into your monkey brain. You're going to go into the brain that humans had 100,000 years ago when we were just evolving. So now I'm out here and in the battlefield daily. And the first thing I want to do is always check bias. Because if you are unaligned with the markets, can keep in mind, there were people actively looking for buys when FOMC was Fed rate decision was pushing gold down. I saw people actively on my timeline having buy positions. And guess what happened to them? They ate absolute shit. So I'm not here to eat shit. I want to eat good food. I want to eat nutritional food. I want to make sure I'm eating food that is cooked by chefs who have been trained for 17 years in their specific cuisine. Now, and that's the same thing with the type of trades I want to be taking, is that I'm only going to eat that good food if I'm taking the good trades. If I'm taking shitty trades, guess what? I'm going to be eating packs of ramen from the dollar store. I don't want that. Ramen isn't that good. Probably has a shit ton of carcinogenics. So I don't want that. So that's when you have that mentality, it's how could you want to take a shittier setup? How could I want to now, let's say we've already positioned ourselves. Why would I want to chase breakout sells from these lows? Absolutely selling at the low. Why would I want to do that after gold has already dumped thousands of pips in a week? I wouldn't. So I just want to wait for that optimal entry. Kevin, do you have anything on your mind that I missed?
Bro, I don't think you missed anything. Yesterday, though, like you said, we had great call outs on gold shorts yesterday off of, I think it was like 42.20.
Yeah.
42.20 on GC. Around
40. Great calls. I remember that. And instantly while you were calling it out, I'm like, yeah, man. Like I was like, I see the same thing happening there. Like it was that resistance was just playing out so nicely. And if you held those, right? Like Kevin mentioned, hey guys, like this is good profit. You're scalping. Intraday could play out. Look at how much that intraday trade played out.
Nope. Huge.
Look how well that played out. And it only played out because we had patience, we held through it, right? Now it's the same thing here, is that now gold isn't doing anything different. We're just, again, looking for the same thing. Whether we get a move like this where we break above these highs, we push up a bit deeper into here, or we just let price do its thing. But either way, both sides tell us that we just got to wait for price to come to us, and we don't have to try to front run it. So now gold, again, this corrective structure, we found some resistance. I wouldn't be surprised if, let's say, we do end up doing this. We end up pushing up and then coming right back down. That's fine by me, and I'll look to re-enter if I get taken out. Yeah. What do you think about potential Dixie outflows? Yeah, so that's another thing to keep in mind, is that if the Ministry of Finance, the Japanese Ministry of Finance, was to intervene, and with the intervention, odds of intervention being higher, if they were to intervene, you would see that short-term spike up on gold, right? You would see those outflows from the dollar. They'd be selling the dollar to prop up the yen. But however, it just always remains a short-term impact, guys. Like, please show me the last time a yen intervention held long-term impact on a day-to-day basis, on an intraday basis. It doesn't. All it does is cause a pullback. For all I care, it could possibly cause a pullback into here, or maybe deeper into 4,200, which is fine. Like, I'm also look to sell gold. Gold's still bearish. You know what I mean? Like, we're still going to fill this range and maybe even dig deeper into 3,900 and create that low, like we're still bearish, right? So yes, risks of the Ministry of Finance intervening on behalf of Bank of Japan is high, and it's higher right now than it was 2 weeks ago. But I don't think it'll hold sustained impact in the gold market and even in dollar as well. Like dollar will get a likely outflow, right? Dollar maybe pushes down to 100.5, 99.5. So what? Dollar's still bullish. Dollar goes through those periods where it consolidates for days on end, right? Before it rallies or pulls back from 100.2 to 99.3, right? So it's completely fine. Even if dollar does something like this, right? Doesn't necessarily mean that gold will pull back or gold's going to do a massive pullback. It could just mean that we're going to get that short-term outflows before gold sellers jump right back in, right? So again, I'm just following price action. I'm understanding the story that is being told on market. I look at it, I break it down, I understand, I align myself, I look at the scenarios, I'm aligned. When it comes to my levels, I execute. That's where I exercise the conviction, right? Yep. That's where I'm like, hey, this is what I've been prepping for. Now it's up to me to step to the plate and hit the baseball. As the pitcher throws it to me, I'm going to be there swinging it for the fences, out of the park. That's what I want to hit. And that's what these trades are. That's what I go into these trades with, the mindset, hey, yes, I have a stop loss of 170 points on gold, which is a $17 stop loss. For my risk, that is approximately a $1,500 risk right here. But I also know that the downside, I have a minimum 1 to 4 risk reward ratio. Meaning for 1,500 risk, I'm looking to make $6,000 off this trade. Now that's shooting for the fences. I know that my risk is defined, it's contained. If we get stopped out, I'll take the loss. I'll take it like a champ, and I'll move on to my next trade idea because I have that conviction. And guess what the next trade idea would have been? If we pushed up higher, I got stopped out, and we're pushing higher into 4260s, 4270s. Boom, I'm a short again. I'm gonna look for another short because I'm aligned with the macro bias. And as long as I'm aligned there, the trades I take that are aligned with it are going to be on the higher end of the probability band. And that's what I want. I want to increase my success probabilities. There's only a few things in the markets that you can control. Number one is where you enter, is your emotions. And the number three thing is that probabilities. And you can impact that based on the first, second part. That if you really control your emotions, you control where you enter, you control how you enter, you can really swing the probabilities in your favor. Now, look, if I look to enter sells on the break below these lows, guess what just happened? A pullback happened. I may get emotional. I may be in drawdown. I can't handle it. I'm going to close my position. And then maybe gold just ends up continuing towards the downside. And guess what? It would have played out for you, but you just had a bad entry. You had bad emotions. You didn't enter here. You had FOMO, so you took a shittier entry, and now you just took a loss. Let's not do that. Let's be patient. Let's wait for this. You don't see me telling you guys sell here. I was the first one to tell you guys don't sell here now. Like you guys should have sold at 7:27 a.m. before market in the morning started. Like that's what I was the first one to tell you that. Right? Yeah, I'll tell you the thought process behind multiple positions. Okay, and I'll take it back to Sunday. We'll do a quick replay, guys. Keep an eye on gold, Kevin, in case it starts moving. Right?
That was starting to pump, so hopefully that brings gold on lower with you.
Yeah. So now, let's say I'm watching this price action, and this is what I was doing. I was watching this price action on Sunday market open. This is 9 p.m. Eastern. So I'm watching it. I see this wick. As soon as we're tapping it, I enter my first position because I'm like, I want to get it. This is my price point. I want to get it. Now I wait for confirms. I enter second position once we start double topping here. Okay, I enter second position right here. Now we start creating a resistance, and I'll enter my third position. As in this, I still have a defined risk. Let's say my risk is 2% for this trade. I still know that I can split that up into different positions, right? I don't have to enter it all at once. Let's say I enter 0.75% risk I enter. Because I'm not sure yet if if the trade is ready, maybe it pushes higher. I don't want to enter all of it without confirms or risk all in the entirety of it. I want to go in bit by bit and then also take profit on these positions bit by bit. That way I can manage it easier too, right? I may have a higher position that could have a wider stop loss. And then I may have some more later ones after a few minutes. Like let's say one of them I got on this wick from a limit, and then another one I entered as this candle is breaking down. Now I have a lower entry on here. This could have a tighter stop loss. So you see what I mean? It's the dynamic risk in this case. Entering trades dynamically. It doesn't all have to be in the same position. You could break that up, and that's just how it works best for me and how I find it easy to manage. Is that okay? If price is pushing higher, I can close one of them or another one off and wait for the confirms. I don't have to close the entire position or go into the settings. It's just how I trade. Like even here, I had initial position here, and then I entered more down here while we were pushing down, and then we got to confirm. So I kind of just stack it, but it's still defined in my overall risk. It's not like I'm risking 2%, 2%, 2%, 2%, 2%, and then I'm 10% risking, right? No, it's like my 2% risk is just split up so that I can manage those positions better, because that's just how I go about it. But you can, like, Jeeve just takes one position, or two positions, but it's just really how you decide to go about it. Doesn't change the risk process overall or risk management. It just changes how you enter, right? Like I'm not entering my entire risk as soon as we get it. I still want to make sure we're respecting that area, right? And yesterday when we pulled back up and after hours of rejecting here, I entered a one last position. I entered one last one. I'm like, okay, if we reject this, like that's it. Like we're gonna head towards back here. We head towards back here. All Asian session waited for it. And again, the same thing played out where Asian, we broke above the daily highs that we opened at. Quick break above. As soon as we snap back below, retest, dump. So what makes you think that the same thing can't happen here? Where we push up, snap back below, sells, dump. We still got so much time in the session, right? That's what you have to be patient for. We got an hour and 15 minutes that me and Kevin are going to be here. Now, as we're here, we don't want you taking random trades and just getting stopped down and be like, shit, I should just waited for these guys. Waited for these guys to give me more impact, feedback and impact, right? And same with ES over here. We reacted to these highs, pushed back down low, and right now we're having a bit more of that corrective structure. Now, where can we go to? We got our levels down here where we previously had buyers jump in, or we'll see how open comes. But again, ES is at these lows right now, and we are seeing those outflows that are currently taking place, but doesn't mean it's not long-term bullish or just intraday bullish, because we know US equity markets, if we dig deep into the right area, there's going to be a bounce. Maybe it's not sustained too long in the intraday period, but there will be a bounce, and that's what we'll watch for, is that whether we get some sort of pullback towards the upside where sellers jump in and drive price lower at open. So it'll all be depending on how price opens and how we react around this price point, as well as the other two that are right above and below it, which are just as equally as important. Because if we start pushing down lower and we tap into here and we get initial reactions, we might see buyers defend this area that they previously defended when Trump came out with the confirmations of the signed deal last week, right? 2 weeks ago. Yep. So that's what we have to watch out for. Either we continue down here and we get buyers initially coming in here, or if we were to push up at open, this could be an area where we see sellers drive price down here, right? Kevin, what do you think in this case?
Yeah, I mean, S&P, I'd love to. That's funny. I was going over the same thing. I'd like to see the shorts play out, especially from non-farm payroll and the Fed switching to a more hawkish feel. I feel like a lot of people are only really focusing on the headlines about the war, whereas, again, trading financial markets, understanding these markets, we should also be very aware of what's going on with the Fed stance too, and monetary policy. So I'd like to see some short terms on S&P 500 to the downside. Hopefully, though, off the open, we do get a bull move towards 74, 72. It's like a pullback area.
Yeah, 74, 72. Yeah.
Yeah, 74, 72, solid 30,000 even on NASDAQ.
I see that low that you're talking about.
The VIX is currently elevated. VIX is above $20 since today. So that's also a sign of uncertainty and selling pressure in the markets and volatility, higher volatility when the VIX is expanded like that.
Absolutely. Yeah. So hitting into the ranges of the higher bands of 20s and 21s that we previously had that VIX outflow from, the volatility calmed down. Gold, again, continuing its merrily way down. Now, as we approach this, guys, this area, you'd want to look to take profit on your positions. If you're in from here or if you're in from here, you'd want to look to take profit, because even from here with your stop loss above the highs, you still have a solid 1 to 3 risk reward. Now, me being the greedy capitalist that I am, I've already told you guys my target is that my target is the same target that market has as well. Now, my greedy capitalist brain knows that I have the conviction to hold down to here. Maybe you guys are working your way towards intraday style. You're switching from scalping and you're trying to really push your limits. In that case, I would suggest you to actually push your limits and hold past your current target. And what that's going to do is it's going to adjust you. Your mind's going to start being tuned towards thinking on an intraday basis. Now, if I'm a scalper, and I was years ago, and you can see my trading style is still scalping. I still take my entries on the 1 minute. I still call out my trades while I'm on the 1 minute chart. Like this trade that we had called out last week, Kevin, in last week's Mark in the Morning, the sells from here beautifully played out for 1,500 pips. Is my scalping style is still in the 1 minute, but my positioning is aligned with the intraday time frame, meaning that I'm going for larger ranges. I'm not going for these puny 10, 15, 20 pip squeak ranges, because I'm not a pip squeak. You know, I'm a grown ass man who wants his money and who wants it more. I want to do $10,000 weeks again and again and again and again, because that's the type of trader I want to be. Now, what I had to do in that case was really push my mindset and be like, hey, you know what? Yes, I'm floating profit on my scalp. What I'm going to do is I'm going to mentally adjust myself to an intraday trading style. And what that's going to require you to do is expand your time horizon. Just like how I mentioned with this gold trade, it didn't play out the minute I wanted it to. It didn't play out in the next session or the next morning. It played out 30 hours later. Because I expanded my time horizon, I was also able to, instead of making $600 on this rejection, I ended up making $6,000. And all it took me was 30 hours of patience. Now, if you ask me that question, would I trade $5,000, $6,000 for just being patient for 30 hours? Absolutely, I would. Because keep in mind that at one point, it used to take me 2 months to make that wage working a sales job on the sales floor. So I would 100% expand my time horizon. That's how you have to think, that if I'm in a scalp here, if my target is here, yeah, maybe I would have taken profit on this if I'm scalping, but I want to become an intraday trader. So what I'm going to do is expand my time horizon. I know that, okay, even if we come down to these lows, maybe we react a bit, but eventually we'll break it. And then I'll go to the market's target that I have towards a downside. Now, do you see what I mean? Just because you expanded your time horizon, you withheld this fake bounce that we had to induce buyers into the market. You understood, hey, you know what? The market does what the market needs to do. It doesn't have to play out on my timing. I just have to be positioned correctly. The time at that point doesn't play a difference or make a difference. All that makes a difference is what price is doing and what the fundamentals are telling you, right? So again, now when I look back at this, if we had just held our runners from up here, imagine how much, if we had not thought about the time at all and just expanded our time horizon, we knew this low was going to get hit. And Kevin and I were telling you guys from April 17th, we're like, guys, like this low is going to get filled if we maintain this macro bearish structure. And so many times we'd come to the charts, people would be like, guys, gold is bullish. Guys, it's not, and it's still not bullish. So instead of just fighting it, let's just focus, hone in, lock in, expand our time horizon, start to think more as traders who we want to be 20, 30 years down the line, and not trade for the session to come, but instead trade for the next decade. If you had 100 trades to take, would the sells below these lows be one of them? Nah, it wouldn't. That's like the shittiest setup you could be taking, right? But If I got a pullback into here and rejections, would I sell? Yeah, that would be one of them. Or if I got a pullback, snapback above, snapback, like we broke back below these highs, would I take these sells? Absolutely, I would.
No, guys, don't forget, smash that like button. Our goal is always 50 likes per stream here. We appreciate you all for joining. We're building a community here. Make sure to join our Discord. I'll send the link one more time. And yeah, join the Discord, drop some screenshots, show us how you use market, what charts you're looking at. We could also introduce into these shows every day a bit of a intro into our community. And if you guys want to share your screenshots before the show, we could share it on the show and really break down some of the charts you're looking at and give you a new perspective, right? When it comes to trading, learning how to trade, understanding things, asking questions is how you learn. And getting a different perspective is also how you open your mind to new things and to really get around the curve or the difficulty that you're dealing with.
Yeah, absolutely. So we just had a headline come out. Iran state media says Western part of country's airspace is now open. It's a little bit of de-escalation, but we'll see how it holds weight. Again, it's minor de-escalation. It's not much. Maybe it causes short-term movement towards the upside. This plays out, but again, it's not much, right? Especially after we just went over the fact that, hey, this is holding the most weight right now. This entire narrative with the Fed higher for longer. So any sort of pullback or aggressive whipsaws eventually get faded out in the market, right? Like eventually, like even here, you had gold digging into these lows, create a new low, instantly pull back from 41.15 to 41.36. That's a massive pullback, by the way, and then gets faded out. So again, just as long as we're aligned, we're aligned on the right side. We're watching how price structure shifts here or reacts here. That if we push up into here and this plays out, perfect. That would honestly be awesome if one of these ideas play out in this session. That way you guys can jump in on this trade and we're not riding this alone, right? On the other hand, if this first one doesn't play out and the second one plays out, voila, bravo. I will look to execute sells there and I'll actively monitor and call it out on Market in the Morning if we were to push up to there. So until then, it's just like watching it. So we just had a question come up, Kevin, if you mind.
Yeah.
If you're new to trading, how would you start? Yeah. So how I would start is the non-traditional way. I would not pay attention to candles. What I would understand is, and you could call me biased, you could call me whatever you want, but I'm gonna go to market. Is that I'm not saying sign up for market. I'm saying that you want to understand the story. And if I'm someone new in the market, I would want to make it my goal to understand the actual story behind price action, behind what's actually moving the markets. And I'm telling you, it's only retail traders. It's the new generation traders who think that it's just candles that move it. Everybody else who's a grown adult knows interest rates, knows macroeconomics affects the markets. So if I was a newbie trader, I wouldn't focus too much on price action to start. I would focus on understanding what market I want to trade and then what impacts it. If I trade gold, I know that, hey, the macro bias, the macro playing field and the geopolitical playing field is what holds most weight on gold, as that's what institutions position themselves based off of. So now if I know that, then I can start to look for technicals, and then it becomes much easier to know sell high, buy low. Right? But if I'm chasing candles, people get stuck up looking at patterns. Patterns are fucking useless, guys. Markets are random. Markets are literally random. Read a book called Fooled. I want you guys to read this book. It's called Fooled by Randomness. Okay? The hidden role of chance in life and in the markets. Read this book. It will really open your mind on how truly random the markets are. Right? And that there's no such thing as a definite, yes, this is going to happen. It's all a game of probabilities. Now, if I know it's a game of probabilities, I'm not going to be affected if I take a loss because I understand the opposite end of that probability played out. The losing side of that probability played out. Just as much as if I was able to get the winning side of it, the losing side played out. Finished this some months ago based on your suggestion. Thank you, man. I'm glad you read it. It's a great book. Yeah. So probabilistic thinking, again, Just same on gold, no entry given since this was before market in the morning, so nothing called out on gold yet, besides just the pathways of price that you see I have labeled out here that we could take. In the meantime, we got NYSE just short 2 minutes.
Oh yeah, yep.
NYSE open in just 2 minutes. We'll keep an eye out, and yeah, just lots going on.
Yep. Good job, Braid. Keep it up, man. Keep up the good pace. You know, everybody's on their own journey. Get the goals to be 1% better every day. If you get 5% better one day, great. But your goal is to at least get 1% better every day. Know that you're coming into trading with a learning mindset, not a, oh, I know what I'm doing mindset. No, every day the market's teaching us something new.
Exactly. It's teaching us something new. I'm here to learn. I'm here to absorb this information. I'm not here to get stubborn, stuck up in my ways of thinking. I'm here to be fluid with the markets. I'm not here to attach myself to a position. Now, look, if I get stopped out here and this doesn't play out, I'm not going to force that sell. I'm going to wait for price to do its thing. I'm not going to just sit around and sell every little pullback. I'm going to wait for these key attack areas that I have mapped out.
Yeah.
Right? Thank you so much. Yes, I made a product which I would use as absolutely. That's the goal. That's what every great founder does, is build products that you would use every single day. And I use market ever since I launched this, I have used market every single day. That's and awesome. I'm telling you, I have become a much better trader because I understand fundamentals. And at times, there would be times where I had a different bias than markets because bias than what market had. And majority of the time, it would be market would end up being right because I would be too stuck up in it. And that's why I'm like, you need to be fluid. You can't be too focused on one side. But yeah, in the meantime, while NYSE is opening, we'll open up a GJ.
Yeah,
so again, GJ, I really stopped trading GJ back in like 2024 is when I stopped trading GBP JPY. But with yen, the yen intervention, you see that yen is holding a bit more strength at the moment, and we are in this like more so this intraday range towards the upside, right? Intraday range towards the upside, and then we have down. Oh, sorry. Let me just get back. We'll get right back to it. So we had NYSE open here, and you can see we're just digging deeper right now. We could easily dig deeper into this demand right here. And let me just mark this up for you guys. Dig deeper right into this price point here. And then we'll see how price either rejects here or reacts, right? But yeah, looks like we're going to dig deeper into here as these 1 minute candles start closing. Gold, on the other hand, again, is still creating that lower high. Looks like it wants to push down. So we're still in from here. If you're a scalper, you can set that to break even. Set it to break even and then push and then just hold it. I was trading forever, but wasn't able to crack the code until I started understanding fundamentals, and market has played a huge role in helping me understand them. Beautiful, man. Nice. I love to hear that. Thank you so much for sharing that. And we're very, very glad that traders like yourself, smart, educated, serious traders like yourself are taking advantage of such a phenomenal tool. So my friend, thank you so much for the feedback. This is something I just sent to my team as well. So again, like we keep winning, you know, this is what it's about, conquering the markets together. No one said it has to be a solo mission, right? Yeah. We can do it together. We can do it with ease, and we'll continue to increase the probabilities of our success. It's crazy how SpaceX price has fallen. Yeah, actually, let's have a look at that as well.
SpaceX back below 150 where it came out.
Insane, dude. Who got left holding the bag? Come on, guys. Be honest. How many of you bought the highs?
You're going the wrong ways, Elon.
But honestly, like, what's it at now? 149. And what did it open at, Kevin?
149. Yeah, 149.50.
Like, yeah, like honestly, like if you're gonna buy it, if you're buying a 200, you better buy one now. Like you better buy it now. So gold is pushing up right now, guys, right? Gold is pushing up here. We're going to watch. We had that headline coming that was a bit more optimistic. So we'll see how we react as we approach back. If you were in profit and you took some, you can move your runner to break even, right? Or maybe just keep your stop loss. Let's say you moved it to break even. You're monitoring it. Keep in mind that this scenario can play out. We have to keep in mind that we could peak these highs and come back below. And if that happens, then that's fine. Then you'll enter those sells on that re-entry here. Okay, that'd be that re-entry. So, but we must observe, because if we don't break above 25 over here, if price doesn't make its way above 25, then this won't happen. Then we won't play out in this scenario, because if we remain below 25, then it's just going to be continuing its merely way down. And this was just like a retest, right? So again, for this to play out, we would have to get above 25, head towards the upside, take out these sellers, snap back below, enter your sells there. Otherwise, where this pullback might just get faded out like this. So just quick breakdown of the price action. Yeah, not much happening on open over here, right? Markets are still at this price point that we were talking about right at open. That this is like,
gold pulled back towards that possible retest entry, right, where we were consolidating before we dropped. I was looking at where we are right now, around this 4140. You know, if we do keep the bearish structure of we made new lows, now we're making lower highs, we should not be able to break back above 4151. We should be able to see some continuation from here.
Yeah, you're looking at GC, right?
Yeah, GC. XAU USD would be looking at 4133.
And but that's what I mean. Even if we break above it, like it's just gonna, and we snap back below, it's gonna continue down, right? Like,
exactly.
It's gonna be that similar fake out type of move where it takes out like we had here, right? Where you had a quick push above, took out these highs, and getting dumped. So that's also likely. But again, Kevin mentioned like this is, we're just pulling up into here, and I talk about it that if on XAU USD, in order for this to play out, for these highs to get taken out, you need to break above 4125. If that happens, then you have a probability of this reaching these highs again and potentially stopping out those sellers and then actually dumping after. But if we can't push above 4125, then this is likely going to hold as a psychological area, and we may just get sellers fizzling fit coming in here. So again, waiting game. That's why we have these scenarios mapped out, right? Without scenarios mapped out, without market guiding us in scenarios, we could just be left to think, to just fend for ourselves. Like even here, like market showing you, we could push above these highs, push into this resistance area before we see sellers jump back in. And again, ES again, it's just same just over here, right at those that open price.
Yeah. Yes, in that demand area, like Nalad mentioned, you know, I wouldn't be looking for shorts at this point. I wouldn't be looking for longs right now with the weakness we're looking at the moment. I do think we'd probably have a better chance of holding on S&P 500 to the upside, even just for a short-term pullback, about 10-15 points. But
yeah, just be careful. Like it's as soon as we break this low here in the 1 minute that was made at open, like it's going to push down to this level. So as soon as like we break this low, as soon as this low breaks, like it's just going to, I think, dagger down into this area.
PMI in 10 minutes, right? What do we have? Flash PMI? Probably. Yeah, flash PMI. So S&P Global Flash.
Yeah, like a PMI, especially S&P Global one, doesn't make much of an impact. Like you'll see it. Like you'll see why even Reuters. And I talked to LSEG. So LSEG is the provider behind our economic calendar. That's why it's an institutional calendar. LSEG stands for London Stock Exchange Group. Anyways, they bought out Reuters, Data Branch, Refinitiv 3 years ago for $32 billion. So we get our institutional data from them. And I even talked to them about it on why you guys have it as non-impact. And it's because it rarely has an impact. It is literally a none. You'll see other people say, why is it none? Because it doesn't really have an impact. When's the last time you saw this data report? It's the ISM one. And there's a method, there's a reasoning behind it. If you look at how S&P Global calculates PMI versus how ISM does it, they use weighted versus non-weighted, right? So S&P weights their PMI readings, meaning that each specific category, prices paid or whatever, has a different weighting in their PMI calculation, versus ISM uses no weighting for any of the categories. So ISM ends up being more and more of the impact for it.
Here's a good question. What do you think about Jeeves' gold bullish bias as per his latest tweet?
Yeah, I mean, everybody has different analysis in the markets, right? I'm not Jeeves. I'm out here breaking my outlook on the markets, and I'm explaining to you the trades that I took from here the sell that I wrote down, the sell that I'm in from here, what I'm personally looking for. So Jeeve could be right, I could be right. It's the probabilities at play here. So who's right? It's going to be up to the markets to decide, man. And that's not the point. The point is that I gave my breakdown on what I'm thinking is going to happen to gold. Even if we push up here, even if let's say we push up to here, okay? You have to keep in mind, your Jeeves positioning for buys is from down here, right? Jeeves not buying up here. So Jeeves in those buys from earlier than most of you were awake. So even if we push up to here, that's Jeeves trade playing out for 600 pips. For him, that's a win. You get what I mean?
Yeah.
Now that's aligning on my sell side. And guess what? It's a win for me too. So it's not who's right. It's about the positioning. Is Jeeve could be right here. I could be right here. And we're both right. You get what I mean?
Yep. 100%.
And guess what? This is still a massive play towards the upside. And in the other side, this would still be a massive trade towards the downside. So if we both end up winning, who ends up being right? We both took a trade that we both planned out for independently. You get what I mean? So I've learned very quickly and to not let other people's bias play into role with what you have analyzed. Now, if my analysis is this, if a better trader is looking for something, and I know Jeeves a better trader than I am, if he's looking for something, I'm not going to switch up on my analysis that I've spent years learning how to do and building the conviction in. If that's what you guys do, if you wait for other people and you immediately exit your position because someone else is on the opposite end who you respect and who maybe is a more experienced trader than you, then my friend, you don't have conviction in your own trade ideas and your own analysis. Because if that's happening, then either you need to block out any external distractions that are going to prevent you from executing and actually benefiting off your analysis, or you need to just hone in and actually put your balls on the line. So Jeeves' trade idea from down here, the buy that he's in that I'm not even in, isn't going to pay my bills. What's paying my bills is the short that I took from up here and I rolled till down here. What's probably going to pay my bills again is if this short plays out, or I'll just take a minor loss. Keep in mind, I already made like $6,500 last night. So I'm good for a $600 loss if that's what ends up happening. You know what I mean? So Chief can have a bullish bias. I can have a bearish bias, and his could play out until here. And he's only expecting a pullback. He's not saying gold has just flipped bullish. He's just saying gold could pull back deeper before we have sellers come in. For all I give a fuck, gold could pull right into here. Oops, let me just do that again. For all I give a shit, gold could pull right into here. And guess what? Outsell. And guess what? Jeeves' bias played out perfectly, and my sell idea plays out perfectly. So that perspective is what you guys need to do. What you guys need to keep in mind.
Huge. S&P holding that support area that we had. Very nice. Very nice. SpaceX at 147 and dropping right now. That is amazing. That's awesome. ES holding. Gold still in this area of resistance. Would want to see it try to break below 41.37 on GC, 41.18 on XAU USD. Oil has really been just dropping lately, but I would definitely not look to sell the lows of oil. These are the extremes we have here, guys, right? We haven't been to these levels since March 10th. This was about 2 months ago.
Yeah.
So leave oil alone. Thank goodness gas prices will probably start to come down soon with it. But this is not day trading wise something that you'd want to short these lows or buy these lows because of the context is still more bearish.
Yeah, exactly. And you can see like any escalation gets faded out on oil. Like the ceasefire is holding most weight there. And yeah, just on gold again, same stuff, man. If we're just following the same playing book, if the buyers jump in, I'm not looking to buy from these highs. I don't like buying on the breakout above these highs here. I rather look for a pullback sells that I have planned out, because that's the analysis that I have in mind, and that's my outlook on the financial markets. Again, you guys could have different biases, different analysis. And me and Jeev were on call right before this. Like we were in a meeting and he was like, yeah, gold's gonna push up from here. I'm like, yeah, well, I'm in sells from up here. I'm still riding those. And my TP is more towards the downside. So even if it plays out and pushes up, cool, man. I'll take a small loss. Maybe I'll lose $600-700. Wow, still up $6,000 for the start of the week, right? So again, positioning, as I mentioned, it's positioning. Now, if you're a scalper and you take a break even here, well, guess what? You didn't lose anything. Plus, you took profit, as we were mentioning that you should, if you're a scalper, start to take profit. Now, if you're intraday and you see something like this happen and it comes back to your entry, maybe stops you up, cool, move on. Take the loss, move on, let price do its thing, right? You're not always going to win, especially after gold has just dropped from start of the week till down here, right? So that's what we're watching out for right now, is how gold reacts to our scenarios here. And on ES, again, as Kevin mentioned, with that low holding, unable to break down, so we didn't get this push towards the downside. But as soon as we snap back above this area, we got that pushed.
Yep. Absolutely. Guys, good levels, man. Great levels here on market. Great analysis. Noab, sir, are you still in gold? Sells from 41.30.
Yeah, man, I told you guys I was here. I told you guys my stop loss. Again, please don't take my entry and my stop losses as your definite ones. Like, you do it as per your risk parameter. The only reason I took these gold sells here is like because I've already made a ton of profit from up here. I held these sells all the way till down here, and I already withdrew my profit. It hit my bank account. Like, I'm good for the week. That's why I'm looking. I can risk sells like this. But if you're chasing, right, I would much rather in this case wait for this potential scenario where we take out these highs, close below, and then push below, right? Or push a bit deeper and retest a bit of the higher selling price points. Otherwise, you just want to watch and see how price action reacts here. But yes, I'm still in these. I still have my stop loss, which in that case, I'll be the first to tell you I took a loss on that one. But I was also the first to tell you, hey, this is what we're going to watch out for. That if this happens, I'll take the loss and then I'll re-enter, right? Yeah. So positioning is important, guys. That's why I said do not enter sells on the breaks of these lows just because you see lows being printed. Gold easily does a pullback back to these same price points that it was previously at. And guess what? We're right back there.
Yep. Guys, there's our flash PMI. And as you see, not that big of an impact. Markets did not give us that volatility that spikes when we have higher impact economic data.
And just I just want to get back to that GJ analysis real quick. Sorry, because we completely moved past that. So that GJ analysis as gold just continues. When I look on the weekly, GJ is in a very, very tight range, and that's primarily because of both Bank of England and Bank of Japan, right? You have Bank of Japan attempting to prop up the yen. You have the more yen intervention plays and chances of it happening. But when we still zoom out a bit, we can still map out like very key demand price points, right? Like, you still have your demand down here entering every time we tap into this area, right? You have your higher demand zones here. You had an intraday demand printed right here. So main thing, mapping out these areas and then playing those ranges as we come to this scene. Now, I know that with the increase of risk of the intervention, that there are chances that, okay, if dollar is surging, Ministry of Finance can come out, prop up the yen, and then you would have GJ digging deeper into here, right? Until then, you just want to follow and play these ranges. But honestly, guys, I'm not a big fan of this market. Like, I'm not a big fan of this market unless it's trending cleanly, and it hasn't been trending cleanly since like start of May. So this I'm not a big fan of. To me, it just looks like more chop on the intraday time frame, especially because this isn't something that I watch too closely. But like, from a technical point of view, like if you see like rejections of this area consistently, you could see buys playing out from here and pushing towards the upside. But again, like, this isn't a market that I trade, and I haven't traded in over 2 years. So I don't even have that much like education or information to give on it, right? So again, let's back to ES. ES held those lows as Kevin was talking about after we failed to break these, right? And gold is, again, it broke above 25. So this is giving me signs that, okay, if we hold this 41.25 area, let me just hide this for now. If we hold this 41.25 area, that we could see this push towards and take out these highs, which is fine, guys. This is completely fine. If these highs get taken out, then we'll see how market actually reacts. Whether do we close back below, or do we then just create a lower high and then retest this area, and then once we close back below, we get that outflows. So time will tell. We're here for another like 40 minutes.
Yeah. Take your time, guys. Don't
Yeah,
force
Kevin,
it.
do you want to share your screen? I just have to. I'll be right back in 5 minutes.
Yes, sir. Do your thing, bro. Let me know. I'll bring it back on. All right, guys. Look at that, man. S&P right off that demand. Again, this was right pre-market plans, pre-market levels. I tell you guys all the time, when we're doing our analysis, we're coming into the markets. We should never just be waking up, rolling out of bed, and jumping on the charts. That's bad habits. You're going to have very little follow through. You're going to build a crappy routine. You want to be consistent. You want to be happy with yourself. You want to be content with what you're doing. And routine builds consistency. If you give yourself the opportunity 5-10 minutes before New York session opens, if you're trading the NASDAQ and S&P, to mark out your zones and levels on that higher time frame, 30-minute, hourly, 4-hour, daily, great. You're giving yourself the advantage of looking for your levels before it occurs. When you don't do that, and you don't have these drawings or your price levels, every little move you see, you're going to try to trade. You're going to say, oh, okay, look, we're breaking lower over here. We broke pre-market lows. I got to short it. Well, guess what? We knew from our pre-market that was a support area. We want to go long off of support. They would have been stopped out once. Markets would have moved in their favor. This also, look at this, is another big wick. Remember, guys, when you see wicks, it is not just a wick, but at some point it was a full body. So this big candle started dropping again. Those who got in and out in that first candle, they tried one more time on the shorts. Oh, I was too early. I got to try short again. Boom. Again, it was a support area. We moved higher, blasted through. I said even a 10-15 point pullback. We ended up getting a 25-30 point pullback on the S&P 500 from those levels. Those wicks, you would have been able to look for your entry in those wicks because that's the zone reaction we're looking for. And then you'd be able to target that next area of interest we had, which was this old support, which now becomes resistance. And look at that. Market's continuing to fly higher. SpaceX is chopping around right now. It's at 153. So nice climb up on SpaceX. NVIDIA also trying to turn around here on the 15-minute time frame too. We had a impulse move here at 9:45. Google has been trending higher since market opened. Microsoft was trying to do the same, but is currently pulling back. Apple also trying to move higher. So for the most part, our equities are helping confirm our trend. We also see our VIX continuing lower. When VIX makes new low of day, like it has been doing during this New York session, that confirms the trend for the S&P and NASDAQ. So that confirms to me right here, the VIX, that we are going to continue higher on the S&P. Yeah, so NASDAQ, exactly. That's going to be this one right over here. Same situation. Look at this, guys. We had those wicks pushing into demand. Anybody trying shorts right off the open would have been stopped out had they not done their analysis or just looked to the left and saw how price reacted last time we were in this area. Said, okay, longs off the reaction. So let's say you even got filled. Let's say you even got filled somewhere over here outside of the zone. Stop near the low. Target that next area. Now, usually, again, we like to look for at least a 2-to-1, 3-to-1, whatever it is that your trading strategy requires for you to be a consistent and profitable trader. Now, obviously, the higher the risk to reward, the better in a sense of you could be wrong more than you're right, or even have a 50% win rate and still be profitable. But that doesn't mean you want to go for these crazy, oh, here's my entry. I need a super tight stop loss. So now I'm looking for a 7-to-1. We don't want to be doing that either because that's also unrealistic. You're not giving the market room to breathe in a sense that if it stops you out here, let's say you entered right here, it moves, it stops you out, and then it continues higher again. Well, guess what? Your stop loss was not where your trade was invalidated. Your stop loss should always be where your trade is invalidated. So you know that, okay, I got stopped out. I had the direction wrong. Now I could look for my next trade setup. When you get stopped out, there's only two reasons you get stopped out of a trade. You're either getting stopped out because you were too early or you had the bias wrong. So when you give yourself the opportunity to put your stop loss where your bias and your trade is invalid and incorrect, that then gives you the opportunity to look for that next level to target, the next trade setup to even possibly look to go short then if you just got stopped out of the longs. But there goes NASDAQ, there goes ES. Like I mentioned, VIX confirming to me that ES is going to continue higher, and we are continuing higher. NASDAQ is also moving up. That's great. Really good analysis. We are pulling back on the weighted index here, so I wouldn't really be interested in grabbing longs all the way up here. We know the spots that we want to enter are those areas of demand, are those key areas that we look for in the pre-market. If we're in the middle of nowhere, we're in a no trade zone. We should have already been in the trade from the demand. We have our price target. Everything in between is just noise. There we go. Nice little pump on NASDAQ there. Want to see ES just run up to 74.72. That would be great. Gold blasted right through that purple level, a purple zone I was looking for to see if some lower highs want to hold. So it failed. So again, Jeev, Nalab, like Nalab was mentioning, right? Jeev has a bullish bias, but he had that bullish bias from a stronger low. So they could both be right and both be wrong at the same time. In this instance, they'd both be right. If Nalab takes profit on the shorts, Jeev is in the longs and takes profit on the longs. That's one of the best parts about the market, is it's all about perspective and having confidence in your trade analysis and setup. Jeev could go make money on these longs right here, and the lab could stop out for profit. Both of them could be profiting in these markets. Neither of them were wrong, but both of them had a different bias. It's all about entry, patience, and your own analysis, and really knowing how to manage your risk to reward properly, and really your risk. ES trying to continue higher, 74.73. NASDAQ, same thing. I mentioned before, we were looking for 30,000 as a key level on NASDAQ for a short position. Well, because we held demand, we could have looked for those longs around 29,700 and targeted 30,000, 300 points on the NQ right there. VIX continuing lower, pulling back a little bit on this 5 minute. So the VIX, just like the dollar is to gold, we want it to be inverse of the ES, but it doesn't have to be perfect. Now, VIX should be a lot stronger on the inversion. So if we're spiking up on ES, we should be dropping on the VIX. I have seen in the past, and you guys have seen here on Market in the Morning, how sometimes the dollar will pull back while gold is also moving lower. So they don't have to be a perfect inverse. It's just an overall trend. We covered this yesterday on Market in the Morning, how the dollar should have an overall strength. So if we're looking at a daily time frame, a 30-minute time frame, it's still overall bullish. We could be pulling back here for, I mean, technically we were pulling back since we started Market in the Morning over here at 7:55 actually. So for almost 2 hours, we've been range bound or pulling back on the dollar, but it's still overall more bullish, right? When in doubt, zoom out. Traders who are so zoomed in like this, yeah, they're going to think the dollar's going bearish. They're going to try some longs on gold, and then they could possibly be buying highs just to get stopped out. Be patient. Know your analysis. Know what you're using to trade. And when I say that, I'm talking about confirmation-wise and price level-wise. ES looks like it wants to try to come hold VWAP as support. This could be a little pullback entry if you're not in the trade already. I'm not taking this entry myself. I still find that this is that area, that middle of nowhere zone. So what we can do is we can put our volume profile on the chart, and we could take a quick look and say, okay, where's our volume profile? Well, it's heavy to the downside. Value area high, value area low. Let's see if we could see that. Value area high, value area low. We want those to be dashed in white so we could actually see it on our dark chart. And what I do notice is we are at that value area high right now. Now, I don't think we're going to reject it perfectly. We have a lot lower volume up here. So I do still think, look at that, guys. VWAP, perfect hold on ES, and it spiked up 10 points. That's an immediate 10 points from that price level. Continuing towards 74.72. That is the final take profit on the ES. Great price levels, great analysis, great pullbacks. Just great overall following the trend in these markets. Good job, guys. Great job. Guys, any questions, please feel free to let us know in the chat. Let me know what you guys are trading today. Did you take any trades? Are you trading? Are you in profit today? Drop some W's if you made some money so far. It is almost 10 o'clock. Great analysis, really good work, and good patience today. Patience is key. When you get in the markets, and like I mentioned before, when you don't give yourself the opportunity to go over your market terminal, go over some of the fundamentals, the headlines, the supporting, and what could flip the bias, then you need to give yourself that time. You don't have structure if you're not giving yourself that time. Time is money when it comes to the markets. Give yourself time. It'll give yourself opportunity. Still holding gold sells. All right, nice. Hopefully it does start finding some resistance. I would be a little careful at this point. Me, myself, I was looking for an area for gold to reject. Only area I have is near our open from yesterday, near 42.11 on GC. That is around 41.90 on XAU USD. Bring Nil back for a moment. What's up, Nil?
Yeah. So again, with the gold, so we haven't gone that snapback below those highs, right? So we're not in those, like you're not looking to enter those sells until we get this sort of price action confirms, because right now we're above those highs, right? We're above those highs and we're looking to push deeper into this price point here, which then we'll watch and see how price action reacts. But like you don't want to enter a sell here while we're above these highs and we haven't shown price action that is actively rejecting this area right now, right? Like you want to get that confirmed where we do snap back below, we retest it, and then you get the sell off, right? In this case, we're at this point. We've just created this high above this. So in order for this idea to be valid, you have to get this sort of confirmed. This sort of confirms, right? Otherwise, price is just going to push higher into here, right? Then we'll have to watch and see. But in order for this idea to play out, this would have to we'd have to close back below here, especially we're going into the new hourly candle. So new hourly candle would have to start closing in this area. Otherwise, we're just going to maintain above and we'll push higher here. And that's what we can look to like really get is that push higher in this new hourly candle if we fail to close back below this these highs over here. Makes sense, right? So don't look for sells right now. You want to look for sells when the confirms are there. That's why I had the confirms over here. I took those sells. I got stopped out, minor loss. And then now I'm waiting. And I'm waiting patiently because I'm like, okay, my intraday bias is bearish, right? Intraday bias is bearish. But right now the market's pushing bullish. So what I can do is just wait and see where it finds that resistance and where those sellers actually jump in. Right now, we just took out these small local highs that we had for the time being. Doesn't mean that we're now bullish, but it just means that, hey, gold is just pulling back. And all I can do as someone who is aligned on the bearish bias is just wait and see where that pullback takes place and where it stops, and then where sellers start jumping in. So now if we, let's say sellers start jumping in here, I'm still waiting for this sort of price action because without it, it's invalid. All that is this is then a retest to drive price higher into this area. And for that case, I would have much rather just been out and then I would have prevented myself from a loss, right? Because opportunities are endless. So I know that even if sellers jump in here, I'm just going to wait a few more minutes and then I'll get my safer confirms and I'll know for sure, because otherwise I don't want to get caught up early selling here with no confirms that we snap back below, with no confirms that price isn't going to head higher here. For all the market cares is that the premium sellers are waiting at a much higher price. Why wouldn't they just drive price higher up there before jumping in? So that's that level of thinking that you must embody. So here again, just being patient. Exactly the lows that Kevin was mentioning, rejected perfectly, and then we're at that 72 area that he was also talking about on ES.
Yep, real clean, man. That would have been take profit on ES right there. From 70 entries around 74.31, target 74.74. What is that? 30 to 70, about 40 points on the ES and climbing, still moving higher. NASDAQ about 5 points away from hitting that 30,000 level that we had mentioned as well. So really great stuff there, guys. Definitely make sure you like and subscribe, share it with your friends. We're live every day doing this.
Every single day, my friend.
Awesome. Beautiful. Beautiful. Yeah, gold's definitely tricky here. If you're not in the trade already, I would not look to enter a trade
Yeah,
at this point.
I'd wait right now for proper confirms.
Yeah. Exactly. Same with S&P and Nasdaq. If you weren't in the longs this whole run, you don't want to be jumping in at the highs.
Yeah, exactly. It's like this is how people get enticed into the
Yeah.
markets. The markets are deceitful. They're deceiving us always, and it's just let's just be a bit more patient. Wait
Yep.
for trade ideas to play out. See how the market sets up. Don't try to front run it if you don't have a high conviction set up in front of you. Like even in this case, like we're waiting, right? Like I mentioned, this is still like your A minus type setup where on the snapback below these highs, when you get the retest of this price points, that's when you want to look for these sells. You don't want to look for the sells as gold is setting up here and it's still above these highs, because that's just not good, right? Like you're just chasing at that point. Is you're hoping that it snaps back below, but until we get this right, until we get like this movement that we had, snap back below, retest, you're not going to get that sell off, right? Otherwise, you're just going to get that continuation towards the upside that we have planned out over here. So until then, until we get this, and I'll be the first to tell you, oh, yo, gold snapping back below these highs right now, and that if we get this retest, we could continue down. Until we get that, man, like I'm not in any sells right now, and I'll be the first to call that out. Yes, yeah, beautiful play, Kevin.
Yes, sir. You know how we do.
Yes,
Market
sir.
in the morning, baby. We have high standards here.
That we do have high standard. That's why we catch massive plays, man. Like they just if you guys were to count the pips we caught from here just in the past 2 weeks, the sells from 45.25s, the sells from 4,500, the NFP sells we called out, which ran thousands of pips, the sells we called out at 43.54s, right? All of these different sells from here, man. Just way too many.
Yep.
Handful.
Killer, man. Killer. Yeah, great knowledge. W no lab. Good teamwork.
Great teamwork.
NASDAQ did hit that 30,000. I believe it hit highs of 30,004. Nice. 30,004. ES hit the 75 or 74 above VWAP, still moving higher. And not an area where we would short, not an area where we would long. This would have been our take profit area.
Yeah. Kevin, I gotta head out. I have a meeting in 5 minutes, but thanks a lot, man. I'll join you sometime this week.
Yeah, for sure. Let me know. I know tomorrow's Wednesday. We got Imre joining us.
Yep.
Thursday, hopefully we have G-Von.
Yeah, with PC. Otherwise, I'll tune in. And
cool, bro.
Let's kill it. Take care, guys. Awesome. Have a good one.
Have a great day. And guys, you guys could remain here with me. We'll keep market going for a little bit. We still have great price action on ES and NQ today. Gold has been much more range bound, chopping its way higher, really going against the overall bearish trend on gold. Doesn't mean that we're just flipping bullish now, right? Just because we're seeing an internal move in the opposite direction of our fundamental bias does not mean that we're going to completely reverse, and we should be expecting 4,800 soon on GC or XAU USD, right? That's an unrealistic expectation. We want to keep market expectations realistic, so when we're taking trades, they're, again, aligning with the probabilities. We always want to make sure probabilities are on our side. ES and NQ, this was an area that I was looking for a short position, but because the longs worked so well off of that demand, I'd really want to be extra patient for a short. I'd want to see possibly a higher time frame. So we could look for a 15-minute time frame, reject back lower, 30-minute time frame, reject back lower, but we'll have to see. Gold to come through. Yeah, you guys think gold's still going to come through on the shorts? I don't know. That's quite the pullback. I would be patient. I would not be taking random stabs on gold as we're moving higher right now. I know I mentioned just because we're moving higher doesn't mean the bias is changing, but we have to see pullbacks, right? It's only healthy in a market that if we're bearish, we get bullish pullbacks. If we're bullish, we get bearish pullbacks. S&P still climbing. NASDAQ still pushing higher. Phenomenal move right there, guys. Really clean price action. Gave you guys a few buying opportunities at these lows. I even mentioned when we were pulling back on this candle at 955, how we were probably pulling back to hold VWAP as support. That's exactly what happened. We ended up moving over 20 points since then. So really great breakdown analysis and price levels on ES. The dollar pretty range bound. We could take a look at oil too. We mentioned oil is still in a more bearish trend. It's just at some extremes that we haven't seen for the past couple of months. So when we're at those extreme lows, we're at the bottom of the range. We want to be patient. Forget about small pip. Yeah, right. Listen, man, look for the moves. Look for the moves. Let's see. So gold's still pulling back. Would stay patient on that end. Oil is still moving lower, so something I like to do, as you guys should do as well, right? Mark out or at least acknowledge where that previous day high and low is, so you know if price is trading above or below it. When price is trading below it, you have our trend. When price is trading above it, you have our trend. When price is in between them, you have our range, and you should not expect a trend. So oil, we see, is back below its previous day low. It has been down here already. If oil could break its pre-market low, instead of looking for a liquidity sweep and a reversal, I'd look for oil to try to close below that low and look for a pullback and retest to go short again to follow that trend versus trying to catch the bottom, catch a falling knife on oil when we see it has been so clearly bearish since these highs around 103. It is now down 30% from those highs. Now remember, oil is not an investor's investment. Oil is not something that people buy and hold. Oil is something that is a heavily traded, not even asset, a bit of a commodity. But what we see, commodities more so gold, but what we see with oil is we just see overall should be within a range like we saw these past few years here. This is 2024, 2025 into 2026. Oil was between 63 and even all the way down to 40s, guys. $44, 63 and $44, $20 range on oil. Definitely took time to get from highs to lows, but then we had the war start. It got very elevated. Then our new range became 75 to 105, $30 range, much higher at this point. We're at that 73 right now. We don't know if we're going to continue lower. I wouldn't think we're just going to drop right back to normal prices on oil, but that doesn't mean it's not going to happen or not a possibility. Yeah, so tomorrow is Thursday. I'm sorry, tomorrow is Wednesday. So Wednesday we have Imre on. Imre is one of the best investors and traders as well that we know that we have on our team. He is a institutional trader, and he's on Wednesdays. He has fantastic insight, similar analysis to my own, really great insight, great ideas, and so definitely come prepared with some Q&A, guys, because Imre is awesome. It's a great team effort. Wednesdays are a great show. And then Thursday is when we have Capital Hungry himself, Mr. Jeev, joining us. So Wednesday, Imre, Thursday, Jeev. Friday, we'll see if Nalab wants to join again. If not, it'll just be me. But we're always hosting these streams, always giving you guys the best of insights and trade setups. I mean, look at this, guys. NASDAQ, man. Hit that 30,000 and it's rejecting it again. That's 50 points right there from those highs in this resistance point off VWAP 2. I mean, a lot of confluence to now take this short and trade the range. Look, markets have given us a range from low to high, from high to low, right? I'd be looking for NASDAQ to now make its way back to the bottom of the range again. And don't forget, we had this bull move intraday, but look at the daily time frame. Daily time frame was still very bearish. We have to take in for account the overnight session when we're looking at markets, especially when we're looking at futures or Forex, CFDs, things of that nature. 15-minute closes in 3 minutes, and it's definitely giving me the rejection candle I was looking for on NASDAQ. That's great. So again, ideally, look at that. We're able to change our bias like that. We understand how markets move. We understand the ranges that markets give us. We're able to take advantage of that. So W's on that. Gold, there we go, finding a little bit of resistance on gold. Again, I would not be looking for a random short on gold. I'd be waiting to see a 15-minute time frame, sort of like we're seeing right now. A small green body or even a small red body, longer upper wick, shows us a rejection that sellers are starting to absorb the buyers. Then we could look for price to try to make its way back lower from there. Let's see. A question out of curiosity. I was always trading US 30 since I started trading in 2020. I know SPX is very popular within traders. Do you find preference when trading SPX versus US 30? So US 30, I believe, is off of the Dow, right? So the Dow is the US 30. That would be the YM when it comes to futures. So it really is a preference thing, right? What have you been the most comfortable trading? What sticks out to you? What have you been trading? What do you have the most experience with? And then you also have to ask yourself, have you been gaining that consistency that you've been looking for, or do you feel like you're sort of been spinning your wheels? If you feel like you haven't been finding consistency that you're looking for with US 30, then yeah, I would definitely take a look into the SPX. SPX is a very heavily traded asset around the world, but mainly in the US. So if you are trading SPX, the best time to trade it is off that New York session open. Excuse me, or after some type of economic data event. That's around 8:30 a.m. Eastern. NASDAQ just hit that 30,000 again. ES still continuing higher. What's great too with trading the SPX or the ES for futures is you could use other assets to give you some insight, like looking at things like the weighted index to see the strength in equities, the VIX to see if we're confirming trend or we're looking for a reversal, or whatever the case may be. The Dow US 30, it's called market internals, like the advanced decline and things like that, but it tends to be a little laggy and doesn't give the best of insight. So really a matter of marking out your levels and finding your analysis via market. Say, okay, well, let's look at the Dow, which I said is the YM, US 30. That'll load in just one moment here. Here we go. Dow supported by Iran de-escalation as market eyes US PMIs, right? We knew we had flash PMI this morning. Market gives us our breakdown, what's supporting the bias. Now, normally the Dow US 30, SPX, even NASDAQ, they tend to trade and trend together. So if one's trending, we look for most of them to be trending. Very rarely will we be taking a short on US 30 while seeing SPX is moving higher, right? We don't want to be counter trend trading against anything. ES is still continuing higher. It's at 74.83. That is a full 60 points from that original area we were looking and talking about entries from this morning. Really great levels, great call outs today, and great market analysis. NASDAQ still struggling with that 30,000 mark. I wouldn't jump in short so quickly. I also would be a little patient on the longs, like we mentioned. The move had already played out, so we don't want to be just jumping in randomly, but we also want to trade with the trend. Gold, beautiful. That's the 15-minute rejection area that I'm looking for on gold. So take a look at this point. What we'd look for is this candle to start to dump, possibly break below this low, and see if we create some type of pullback area. So if we break below that low, pull back, lower highs, and we take it on the pullback, stop loss near that recent high that we were just at, target that low that we were at earlier today at 920. It's not like we're looking for a huge move. We're not looking for the biggest, we need it all the way down here, but we're also not looking for a little 10-point move, right? We're looking for a nice, that is 32 points, 320 pips or ticks, whatever you want to call it. If your futures are Forex, pips and ticks are the same. But possible short setting up on gold here. Just really need to see that breakdown below 41.50. Retest 41.53, go short. On XAU USD, if we were looking for the same trade setup, here we could mark out with our rectangle tool. We could use our trend line, and we're looking at 41.33. So break below 41.33, retest to 41.35, short position. If we don't get that breakdown and retest, we don't have a trade. So if gold does want to continue higher from this point, guess what? That's fine, because we did not take a trade ahead of time. We're being patient. We're waiting for things to occur. When we wait for an if this, then this scenario, then we have to wait for things to actually play out for us to execute our trades. We're not just looking at, oh, here's a green candle with a long upper wick, I'm going to grab a short now. No, give me the break and retest. Give me some structure in our favor. Give me something that actually gives me confidence in my trade setup. Same reason we didn't just take random NASDAQ shorts at this point either. Give us some structure to the downside and then retest that area for us to go long. Very good stuff. Great breakdowns today and great analysis. Man, I gotta share a laugh. Guys, 3 more likes till 50. W's in the chat. You guys are amazing. I didn't even notice. There was a meme, man. So obviously you guys saw SpaceX has sold off. It's at 157 now, but it still sold off a lot from those $220 highs. So what happened was Elon, who was a trillionaire, now fell back to $998 billion in as his his current net worth. So there was a meme online. It said Elon Musk back to the poor club with $998 billion. And I wrote in the comments, yeah, he's going to write that off as a loss and pay less taxes. And bro, when I say engagement bait, I mean engagement bait. That's not how it works. Blah, blah, blah. So funny. But that's funny, man. See, $1 trillion in market cap wiped off like that. Now, it wasn't the market cap that was wiped off. It was his net worth of 1.2 trillion. So he lost $300 billion in net worth in a matter of 6 trading days. That's a pretty big pullback, pretty hefty. I'm still not thinking SpaceX is a buy here. In my opinion, I'd love to see a much stronger move on SpaceX. All the billions and trillions of dollars. Look at this volume from day one to right now. $1.8 billion. Could you imagine that 1.8 billion? All those buy orders now being pushed into the red, now being red on their position. That's going to be a lot of pain in the markets. We always talk about pain in the market. We always talk about gain as well. But where there's pain, there's gain. So if we get some stronger moves, have a huge liquidity sweep, wipe some people out, hit that $100 mark, there's going to be a lot of pain. Below $100, I would love to see SpaceX as a buying opportunity, as it's not a company that's going to just disappear. It came in, it made a stance, it's going to pull back, just like Meta did when it IPO'd, just like Amazon when it IPO'd years and years and years ago. That's just the way it is. Because we have to remember, too, when these companies IPO, there are already early investors. Those early investors, they have shares before IPO. When the IPO came out, only 5% of its shares were actually made public. So think of it that way. If only 5% of the shares were made public, wouldn't that mean 95% of the shares were private? Well, then they would be able to exit their position. Here's your $1.8 billion in exit liquidity, making thousands of millionaires in SpaceX. That's what we're seeing in real time. We've been calling it out here on Market in the Morning. Same with calling out gold shorts. It's funny, man. And look at that. See, I'm glad we didn't just jump in random on gold shorts. And the lab said we were calling out gold shorts since this spike happened over here. Bro, we've been calling out gold to 4,000 since gold had its initial pullback over here at 4,800 and 5,200. I remember when it was pulling back, I was saying, I don't think there's enough pain in gold yet. I want to see us come down to 4,500. I want to see us come down to 4,000. That's exactly what we're getting. Really great breakdown, great analysis ahead of time, and keeping you guys on the right side of the market too. That would make me feel, that would make, what'd you say? That would make one feel better when you lose $100 trade. Bro lost billions. Yeah, right? I know, yeah. But you know what? Just like those comments were saying, he didn't lose billions. His net worth dropped billions. So he never had $1 trillion in the bank. His net worth was $1 trillion because of the companies that he owns. Tesla, SpaceX, what's he also, the Boring Project or something like that. He's got the Boring Company. So he's got a lot of ventures that give him a very high net worth. Does that mean it's all liquid? Absolutely not. We got to be able to know that. It's important. It's not crazy important. It's not going to make you a better trader, but knowledge is power. Knowledge is key. Guys, if you haven't already, man, make sure you smash that like and subscribe button. I'm going to check, make sure you guys hit 50 likes. If not, we're skipping the stream tomorrow. I'm just kidding. I would never do that to you guys. Yeah, you guys already broke it. 52, you guys are amazing. Yeah, I wish my father had an emerald mine. I would be a trillionaire too. Bro, right? Is that what happened? I didn't know that. Elon's father had an emerald mine? Or are you just saying in general? NASDAQ struggling up here. Again, one of the main reasons we're not just chasing longs at this point. We are great with our analysis, great with our patience. That is the key to consistency. 15-minute, 30-minute. Yeah, that's what you heard. Cool, man. That's cool. Fun fact, right? Look at that, bro. This is, again, I'd look for the 30-minute time frame here on NASDAQ. Oh, it's a rumor. I'd be looking for the 30-minute time frame here on NASDAQ to close below this red zone, so below 29,970. ES, ideally, I would want to see it close below, I'd say 74.75, key psych level right there. That would show me a lot of trapped buying participants at these highs in that low volume area that I mentioned too. I'd be looking for us to move lower from there. But what's great, guys, remember our pre-market plan, we were originally looking for shorts here too, but the buys played out better. Well, if you guys remember, ES and NQ today, mainly ES, had that slightly bullish bias on the daily time frame in market. So really clean and really cool how market was able to call that out. Very awesome, guys. Great breakdowns today, great analysis, and great price levels. Gold continuing higher. In my opinion, I don't have a strong level of resistance on gold until where we were yesterday, 42.20. So I'm sort of with Jeeve in a short-term bias of the buys for gold, but I still do believe overall we should be seeing some stronger downside. We're going to crack below 4,000, even crack below 3,800. That would be amazing, right? That'd pose for a great buying opportunity for a long-term portfolio. 3,800, if you buy it and price makes its way right back to all-time highs where it was at, which historically, I always come back to this, guys, because it's important. Historically, gold and silver have never made an all-time high, pulled back, whether it was 50%, 70%, and made its way back to those highs again. It happens every time. It doesn't happen within a year. It doesn't happen within a month. It happens over time, but that's the best investing opportunities for a trader is buying those dips. So even 3,800, that would be a 50% return on investment to those all-time highs, whereas that would be a 30% pullback from those all-time highs on gold. So imagine we even had a 40%. Look at that, 40%. We pull back to 3,400. The amount of pain that would be in the market, that would be over a year's worth of gains completely wiped off the map. We were talking about volume before on SpaceX. Volume-wise, look at that. Futures is only 45 million compared to SpaceX's 1.8 billion. But we have to remember, this is just looking at the futures contracts. We could also look at our Forex, which look at our Forex has a lot more volume, 186 million. Again, this is not also including the GLD ETF, which most likely also has millions and millions as well. So all those millions, all that profit completely wiped off the table. People are panic selling. That's the time when us here with the market community, know that this is the best buying opportunity. Again, 3,400 pulled back 50 to 60%. You're looking at a 67% return on investment on this. Extremely nice return, almost 70%. That's only if it hit its all-time highs again. Whenever it has historically returned to an all-time high, it doesn't just break it. It shatters it and rallies. Could you imagine being able to have the opportunity to buy gold below 4,000 and then it makes its way to 10,000 within the next 5 to 10 years? You'd look like the best investor in the world. So that's what I'm going to be aiming for myself. Not financial advice, just an idea and a breakdown in my perspective on gold. Guys, let me know in the comments if you agree with that, if you think buying gold on the dip is the way to go, if you think you should really wait for us to move back higher first. But buying a dip is always a great opportunity. Here's our 15-minute and 30-minute time frame. Look at this, guys. NASDAQ really trying to get to that price level. S&P showing a bit more hesitation and strength versus the NASDAQ. Really great stuff. Maybe a sell soon. Took a long on gold. Nice. Good job, guys. Be patient. Listen, we're still waiting on that 15-minute time frame. I wouldn't be so quick to buy high either. right? Just because I'm saying I think we could pull back doesn't mean we're going to continue. We still have that bearish bias on gold. So when we have an overall bias, let's say we're overall bearish bias on gold, but we see we're pulling back, then we know that this could just be a pullback. We want to be patient. Look at that. There's that break below. So I was looking for a break below and then a retest of this 41.53. So if you're looking for a trade, you're looking for gold, I would be careful. I would only look for selling gold. If you know the overall bias is for sells, you don't want to be trying to catch the rip back higher. You'd much rather wait for that sell opportunity to take those shorts. Now remember, everybody has their own analysis, so do with it what you please. But if you're trading the overall trend, you know that over the past few months, when sellers take control on gold is much stronger than when buyers take control. Well, then guess what? You would want to be on the sell side of that. Didn't I scalp 41.40 to 41.30? Good job. Good job, man. 41.40. Nice short entry up there on XAU USD. Very good work. Look at this, man. This is setting up nice for continuation here on the 15-minute time frame. We'll be wrapping up market in the morning in the next minute or so. But what I'd be looking for at this point is I wouldn't be looking to take the entry down here. I'd be looking for the candle to close somewhere over here, pull back like we mentioned, and then take that pullback entry, stop loss near these highs, and see if we could ride that back down to take profit 1 at 41.24 or 41.05 on XAU USD. And 41.08, which would be 40,090 on XAU USD. So those are some price levels on gold. I'm holding till 4,100. Bro, get that, man. Get that bag. 40 seconds left in the 5-minute. You could take a look at oil too. Like we mentioned, oil, very strong bearish momentum, but we don't want to be selling lows, but we also don't want to buy these lows knowing the overall context is still bearish. NASDAQ trying its best. We have 30 seconds there to see how the 30-minute closes and how the 15-minute closes. And both of those time frame candle closures are going to give us confidence and direction in the market. Guys, if you're here on Twitter, don't forget, join us every day, 8:20 to 10:30 a.m. Eastern. Here on YouTube, same thing, guys. I go live Monday through Friday here with the Market AI community. Join us. We're always happy to help you guys, give you some insights, give you some possible trade setups and trade scenarios. Yeah, gold looks solid. I'd want to see that pullback and retest for an entry short. And look at this, guys. Dollar is also flying. So this gives us confidence that these shorts are going to try to play out. Whereas ES and NQ, they did not give me the 30-minute close I was looking for. ES closed up here, not down here. NASDAQ tried to reject, but was really struggling. I could possibly see a pullback coming in here, but I wouldn't be so quick to jump in shorts. Gold, I'd much rather jump in a short on gold, which is giving us a much clearer trend. Just like earlier, ES and NQ were giving us clearer support versus gold was in that middle of nowhere area. Give us the sell, please, gold. Bro, right? Yeah, looks like it's getting ready to drop. Looks like it's getting ready to go there. So I'm waiting for a retest. That retest might not happen. We might just drop from here. We saw that the dollar's spiking up with strength, so that could help support gold to the downside. Remember, we want to follow that trend, so we'd be looking for those shorts right now. Stop loss would be above or near this recent high. All right, ladies and gentlemen, look at that. NASDAQ still rejecting that VWAP. Looks great. If I was looking for a short on ES or NQ, I'd be taking it short on NASDAQ instead of the S&P. I feel like NASDAQ has a lot more strength to the downside, especially because of the weakness that SPX was showing. I'm sorry, SPCX, SpaceX was showing. So just keep that in mind. You know, trade the rest of your day if you're going to trade, manage your risk properly. If you guys have any questions, please feel free to hit us up. Join our Discord. I put the link in the comments before. I'll put it in there one more time as well. So join that. You guys can also follow us on social media. Instagram is marketai.insights. My personal Instagram, if you guys want to follow, shoot me a message. Let's make a conversation. Trading with Kev is my Instagram. Trade with Kev is my X. DMs are always open. I'm always happy to help you guys, give you some guidance, answer some questions on how you could use market to gain an edge and everything else in between. Guys, I hope you enjoyed today's episode. Have a great rest of your day. I will see you all tomorrow. Tomorrow we will have Imre on. We'll go over some more market analysis. And then Thursday we're going to have Jeev. And Thursday and Friday we have more economic data. So we'll have some more volatility versus these range-bound markets that we're currently seeing. So guys, have a great rest of your day. I will see you tomorrow. Peace.